Welcome back. Bruce Porter joins us now for this week's Dollars and Cents segment. Thank you so much for coming in. Good to see you.
Good to be here.
All right, here we go. This is today's question. Are you ready?
Yep.
Okay, how can two investments with the same rate of return not equal the same results? Same amount of money, same rate of return, not equal the same result.
So here we are in 2016. We're trying to get a plan together to have a better year than we did last year.
Yes, we are.
It's very important to understand investment math. It's totally different than what you think.
What you think it should be.
So we're going to look today at a couple of examples. We're going to use $100,000 to keep it simple. Investment number one is going to be an aggressive investment. A lot of people think the more aggressive I am, even if I'm young, I can get more growth later and things like that.
Right.
And then we're going to compare that to a conservative investment that has not as many hills and valleys. It's more steady,
Safer
consistent, boring, you might say, things like that. So now, let's assume the first screen we're going to look at. We're going to assume both of these accounts run a 10% average rate of return for the first 2 years. So now the first investment, the first year, 60% growth, the aggressive one. Wow, that's great. You're thinking, I've just hit a home run. The other one, first year, 30%. So we're just using that as an example, about half the growth as an aggressive count. Year two, though, bottom falls out.
Bottom fell right out. Look at it.
Minus 40%. The conservative side, even conservative, it lost money.
Okay.
Minus 10. So now you look, 20% growth over 2-year period, average of 10 for both accounts, but the results are totally different. Now, how could that be possible? Well, we look, now let's apply the money to the scenario. So we got 100,000 that grew to 160, and we had 100,000 that grew to 130. Second year, though, minus 40% of 160. Now we're down to 96,000. The other side, we lose 10%. Now we're down to 113 or 117,000. So we still got a little bit of growth. Now, it's kind of important to understand that they got the same rate of return, but the results are different because of volatility.
Right.
Volatility,
very different.
The aggressive side can sometimes shoot you in the foot.
Exactly.
So
it can
we
get
want to
you
be careful.
Great results, and then it can completely backfire.
Now, so I took that and I applied it to actual numbers the last 15 years, just using a general look at the S&P 500 and a conservative portfolio.
Okay. What'd you find?
If you stick 100 grand in 15 years ago today and not touched it, it'd be worth 186,000 on the aggressive side. There were 4 years on the aggressive side that had significant losses that totaled nearly 80% of value. Then on the other side, we looked at 100 grand over 15 years, same rate of return, 6.09 on both sides, but on the conservative side, there were only 2 negative years that totaled just under 3% negative. So it was more consistent, and not the hills were not as high, the valleys were not as low, and the significant difference is there, 240,000. Now, if you're retired and you're using this for income, if you're taking, say, 5,000 a year out of it, now we wake up, we've got 41 grand in our aggressive side. We've still got 118 in our conservative side. All I'm saying is evaluating the volatility and the risk can result in you not outliving your money and surviving this thing called retirement, which we soon will find out is maybe tougher than our working years.
It's interesting when you really look at those numbers. It seems like it shouldn't be that way, but when you do the math or have someone, an expert, help you do the math, it makes perfect sense.
Well, and that's the bottom line. We want to try to position our money so we don't run out. Everybody wants to be independent, even into retirement.
Yeah.
So now we just got to be mindful of how this stuff works. And if we can't figure it out or we don't know on our own, just call and ask an expert. Call and get some assistance, and you can figure it out. And it's never too late.